But that, wherever you like, in the other side right there would be great. You can sit wherever you like, though. So I usually do my notes sort of for you guys on Excel. And then I save them. So what I kind of do here, I save and put it out onto your site that will be available. Now, it looks like my links might or might not have been working in our class, so normally speaking, once I have our examples to cover, if you go into modules and then you click on the templates for the note chapter, it should pop up here. Okay, it wasn't populating earlier, but it seems to be working now. So you can go out and get this, and we'll hopefully get into this once I sort of discuss the just some generalizations about accounting. Before I get started, any questions generally about the course and what's going on so far? A student brought to my attention today that when you go out to purchase the book, that there's two options available for you. It's either a $160 option or a $149 option. It is acceptable to take the cheaper option, and it actually gives you Cengage access in all of your other classes. So if you have another book this semester in a Cengage or in a class that use Cengage, you would be able to get both books for that 149. So please, it's okay to choose that 149 amount. I'm sorry I didn't know. This is a new textbook for me, and I didn't know that they would give you a cheaper option. That didn't make any sense. Otherwise, I would have put the dollars out there. All right. I'm also going to send around an attendance list. I won't do this all the time, and I am not going to grade you. There's no room in my grading for attendance. This is kind of it serves as a couple things. One, if there's any international students, by checking randomly, it gives me an idea of whether or not those students are showing. There's laws that require it. I am not disclosing to anybody who's international. I don't even know. So if I have a question, I can say, you know, on these days I took attendance, they either were or were not there. And then the other thing is this first week, they're going to want us to certify and confirm that students who signed up for the class are showing up for the class. So I'll give you this, send it out. If you would just put your last name and then your first name, and then if you have either a long name or you prefer a nickname, put your nickname in parentheses. Okay. All right, so it's just some general notes today to start. I want to talk about the types of accounting. So in general, I think when you ask somebody what accountants do, what's the first thing that everybody says? Usually they ask us about tax, right? You guys do taxes? Can you do taxes? That's the one that most accountants get asked about. Now, what are the other types of accounting that are out there? If you looked at chapter 1, you'll know there is financial. And for financial, this serves the stakeholders and shareholders outside of the company. And in the US, financial is based on US GAAP. Okay, the next one is managerial. And this serves managers and executives within the company. Okay, I also added a little bit about taxation and what you'd be doing for the types of accounting, preparing tax returns based on the code. Yes, sir.
And GAAP is generally accepted accounting principles.
That's right.
Practices.
Principles. So tax, managerial, financial, you have accounting, information systems. And this focuses on You have audit. And this is performed by CPAs. And it's assurance of financial statements for registered companies. In the US, they follow US called GAS, generally accepted auditing standards. By the way, I've never taught about a 50-minute class, so at 45 minutes, just kind of. If you see I'm still going and rolling when the time comes up, let me know, please. And then recently, you're starting to see like data analysts in accounting. And you kind of need a longer definition in this, but basically they're analyzing within an accounting context. And then the last one would be consulting. And this one varies. So this is our focus. We're going to be focusing on financial statements for external users. Who are the external users? They could be stockholders. They could be governments, regulatory bodies, potential investors, banks, other loan companies. And then after you go on, this is focus of AC222. So we won't talk about that, but managerial is what you get in AC222. So we have to follow a specific set of rules for producing these financial statements. The financial statements are external. Now, just because they're external doesn't mean that we don't use them internally. Obviously, a lot of our metrics for our executives are based on the financial statements, but they are produced primarily for external users based on the regulations required of the SEC. The SEC is responsible for public companies, which is the focus of this class. So we're going to be focused on corporations that sell their either equity or debt public. All right. And those financial statements that they have to produce under US GAAP. Any questions so far? Okay. So again, what is accounting? Most people, again, don't really know. It's a lot of things, but primarily it's a business language. And it allows managers to communicate things about the business based on GAAP to external stakeholders. That's the focus for this class. Big picture. Business language. And it's a data collection system with financial statement outputs. So this tells you how the firm is doing economically. It is based on past performance. So I'm not telling you how we're going to do in the future. I'm telling you what we did in the past. Now, why does that matter to you? Well, the theory is that the past is the best predictor of the future, right? Given what you've done before, the expectation is you'll be able to do that again. Same thing with companies. And so we provide managers with information needed for decision making. And that focus would be managerial. Let's talk about the types of accounts. So you have 5 basic types of accounts. The first one is assets. These are productive. Tangible and intangible goods to be used in the production of revenue. Liabilities. These are the obligations the company incurred in operation. I should add. Just like the deck. Within the history of the organization. Okay. And then there's equity. And this represents the book value of the company's ownership. Equity gets broken down into 2 categories. First category is paid in capital. And this is typically stocks. So some of the types of stocks you'd see would be common stock, preferred stock, treasury stock. And then the second part is retained earnings. And these are earnings retained from profits in the business. Over the life of the business. Okay, so a couple of things to note about accounts. Assets and liabilities can be current or non-current, also called long-term. Current means that asset will be used or the liability will be paid within 1 year or one business cycle. Very rarely do companies have business cycles longer than a year, but a few like shipbuilding companies and building companies have longer cycles. And then you have long term or non-current. Asset will be used over a period longer than a year. Or liability due after 1 year. You will encounter contra accounts. These accounts behave the opposite of standard accounts. And have the effect of reducing the asset or liability or equity. Couple examples that you're going to see is you're going to see accumulated depreciation. This reduces the book value of the asset. Might also see a discount on bond or note. These are just some examples. Don't feel like you have to memorize them or get them all down. There's an allowance for doubtful accounts. This reduces the accounts receivable balance. You'll have accounts receivable. You'll have allowance for bad debts. So it'll look like something like this, and I'm just using some round numbers. If I just picked 100,000, the allowance for bad debts would be, let's say, minus 5,000. And so you would net these two together, and so you'd say accounts receivable net. And you'd add those two up and get the 95,000. Any question about the account types? Okay. Got through 3 there so far. The 4th one is going to be revenue. And this is the income produced as a result of the operation or formation or administration of the business. And then the 5th one would be expenses. And these would be costs allocated to the financial statements based on US GAAP. So it's kind of dumb, but it is the total of what something costs in US dollars for US. But expense is different. For example, what do we think this building costs? Throw it out there, just a guess. 3 million? Sounds probably good, built 10 years ago. Sounds reasonable. So we got $3 million. Now, how long is this building going to be used for? Theoretically, they did try to burn it down a few years ago, I heard. A long time, right? 30, 40, 50 years. So in accounting, we say, even though that $3 million cost you at that point in time, you're going to be using it for 30 or 40 years. So you should expense it over those 30 or 40 years. So you're going to take a partial expense, and we'll talk about depreciation later, over time. Now, over in finance, they'll go, hey man, you had to come up with that cash flow somewhere. So we want to know where the cash flows are. So you will see the ins and outs of cash or borrowings, issuing stock, things like that in our financial statements, but we provide a bigger picture than just sort of looking at the cash ins and outs on the cash flow statement, all right? What are the basic financial statements? You have the balance sheet. You have the income statement. You have the statement of cash flows. You have the stockholders equity statement. So those are the four primary statements. This lists assets and liabilities and equity as of the last day of the period. Could be month or year. So for example, if you're preparing monthly reports, you can have the month end be February 28th. You're doing yearly, the year end can be anything. Most companies run on a standard year, but some companies run on an off calendar year or a fiscal year. For example, universities run usually typically from July 1st to June 30th. And so that's their typical year. They do their financial statements in the summer when the students aren't around, so there's not a lot of that student pressure and everything that's going on in the operations. Hospitals usually do theirs either in September, at the end of September, sometimes the end of October. They try to arrange it when they're, at least accounting departments are not as busy as usual. All right. The income statement. This is the activity for the company's revenue and expense during a period. This is activity for the company cash during the period. This is the activity other quick things. Okay, that to your right is a T account. So just a T. Debit, credit. Debit means left side. Credit means right side. For assets, a debit increases. So assets. Have a generally have a debit balance. Okay. A credit decreases assets. For liabilities, this switches. A debit decreases. And a credit increases. Now, you're not gonna have to do entries in the class, but occasionally there are going to be this terminology here, so I'm trying to teach you the language right now. I know this seems a little boring, I apologize. It's just as you're going through, even though you're not sort of being tested and, you know, making entries, we're not trying to train you to be accountants here because we know most of you are not gonna go on to be. You start to get that training in intermediate in more details on these entries, but in the discussion, you have to know this part of it, and we'll talk in a minute about the accounting equation and where this will be helpful, hopefully. Okay. Liabilities generally have a credit balance. For equity, you have a debit that decreases and your credit increases. Equity generally has credit balance. For an error question.
Yeah, I was up there, it's no problem.
For revenue, debit decreases. The credit increases. For expense, the debit increases. And the credit decreases. The expense. Revenue generally has a credit balance. Expenses generally have a debit. Any contra account will be opposite. Does that make sense? So if I were to tell you to make a debit, all you're gonna do is just put that number over here. All right, if I was to tell you to make a credit, you just put the number over here. That's all it means is left and right. And the effects, this will be important for you to know for the course. That's what you're gonna have to focus on. What happens when this happens? Does it increase or decrease? Because sometimes it'll be given to you that in the text, but again, we're not testing you on that. You just need to know it because it's part of our language. Okay. Now, before we jump into an example, and it looks like time-wise we're still good, I want to talk about the accounting equation. And this is the overall. You have assets. equal your liabilities plus equity. Now, I just want to give some examples of each. I'm not going to do a whole bunch. Cash. Accounts receivable. Equipment. Buildings. Or property. One thing I have to apologize, the English language is terrible for second language learners. And we have 5 or 6 different words oftentimes for the same thing. So if you are English as a second language and you need to know what something means, please let me know. I can translate that for you, even if it comes up during an exam. You know, buildings, property, factory, we have other names for it as well. So it's just these types of things can make accounting difficult, but it doesn't have to be because they're just, you know, vocabulary. All right, what are some liabilities? Accounts payable. Notes payable. Bonds payable. What are some equity accounts? Common stock. Paid in capital. Or common stock. And then you have the other types of stock that go in there, and those would be preferred. So you could have preferred stock in here. And then you could also have treasury stock. I won't put that in there. Say that blank and retained earnings. We'll make a little note here. Treasury stock is a contra equity account. Okay, so what does this mean? This means overall, if I've got $1,000 in assets and I owe $400, how much is my equity? 600, right? That's the type of math that you are going to get exposed to in accounting. If you struggle with just basic algebra, then it's going to be a little hard for you. If you need a little brush up, you can talk to me. I can maybe send you some tutorials. And I think we have tools for it. But basically here, what we're going to be doing in order to test you to see whether or not you understand accounting is to basically test this relationship all the time. We leave something out and we say, do you know how these things are related and can you find that answer? Because my assets equal my liabilities plus my equity, I know if I have $1,000 in assets and $400 in liabilities, I can just subtract 400 from each side, right? Okay, so algebra would say, okay, I've got this equals this plus and some number. No. Okay. So then what I would do is subtract 400 from both sides. And then I would end up with 600 equals the number. Okay. So that's how I came up with that figure. Obviously, this is a simple one, but basic algebra is the math level that you need in this class. We do get more complicated and higher levels of accounting, but so far in basic accounting, we're not pushing down more complicated math. Always use a calculator too. I'm terrible at adding and subtracting things in my head. always use your calculator. If you're in class here and you're doing examples, you can use your phone for that. You know, I'm not running around here policing you as long as you're not disruptive to whatever you do in class, okay? Any questions? Go ahead.
Can you please give me a flat definition for assets, liability, and equity?
So that would be here. Right? Assets, productive, tangible, and intangible goods to be used in the production of revenue. Liabilities are the obligations, and equity represents the value of the company's ownership. Obviously, these are my sort of shorthand for them. Okay, so this is a typical financial statement for a large conglomerate. Apple is 80 pages long, right? So if you're looking for kind of a longer definition of what assets and liabilities are, whenever you look for a specific company, you might think Apple has some issues that are different than others, right? They've got to deal with precious metals, electronics, and you might say, well, how do you want to, or how are you accounting for your assets? And what do you call assets and liabilities? So while my definitions are sort of short and generic, give me 1 second there. You can find definitions in the company's financial statements. Go ahead.
You can just use control on.
Oh, yeah, just search for a specific one. Yeah, you can use Control F on a PDF to search for this specific. Keep in mind that when you do this, it's going to shoot you all over the place. I know geography wise where I need to go, which is why I didn't Control F it. But if you guys need to, you can as well. But this takes you to Note 1. It's a summary of accounting principles, and they will tell you how they treat each of their assets and their important liabilities. Okay, so while my definition, is assets, these are what we're going to use to run business, right? Liabilities are what we owe from running that business. All right, and then equity is what I have left over, kind of that's the book value of my stuff. Okay, any other questions? So that takes us to 11:45. We'll pick up with this deal page.
And then after this example, walking you through that, I'm going to try to get to
just doing a couple homework examples so you guys can see them. Okay. All right, great. Have a great day. Thank you. Friday. I see you guys on Friday.
Friday.
You gotta keep reminding me that, otherwise I won't come back. I usually would keep Monday and Wednesdays.
where do you usually ride at around?
I have not ridden much around here. Let's see,
St. Joe.
is where I would go if I was going.
Yeah. Back north, that's where I was.
Right.
I'm kind of new to the area, but I love riding too.
Yeah.
I haven't gotten to go out. Place to go around.
Yeah, I'm the same, like I'm looking for that. Yeah. I'm not gonna take attendance other than randomly, because I don't want to put it in as part of the being here is not what's important, understanding what I do when I'm here. My brother said, occasionally I'll do it.
I was gonna make sure you said you were gonna post the Excel on. Okay.
Yeah, it gets posted on the, in the module.
Thank you.
That's where you can wait.
Okay, so if you have not, have you signed in yet? Okay, so you have to go into.
You need it.
Now just kind of refresh this page for it.
Okay, yeah.
And click load chart.
I know, I'm gonna need another semester.
Okay, now put in your username. If you don't have someone that's gonna do it on. Oh. Oh, 60 up in pocket. You see most of that?
I'm gonna take my application. See you, Austin. Make sure it's loaded. All right, I got it. We're good.
You have to do like 0.
It's supposed to be like that, but it's more there. I can't do it on everyone on the town plus.
Okay, so now they're going to send you an email to that address with an activation code you have to activate.
I have a question, are we allowed to take our first, are we allowed to do our first assignment before class on Friday?
Absolutely.
Okay.
Yeah, you can do it whenever you want.
All right, thank you. Professor.
So I know on Canvas for the chapter one assignment, it
Yep.
says 10 points, but then okay. Good, is it to get that full 10 points, do I need to get 100% of this assignment? Yeah, that's good.
I think it's like, if you do over 90% on that first one, because it's an adaptive learning. Okay.
Okay,
So I think you have to get like over a 90 to get you 10.
okay, so as long as they get over in that, I mean,
I
was getting,
believe that's the way it is, but let me know if it's not.
okay, I wasn't sure, because I was like,
They're
I guess
relatively easy.
70%?
They're relatively easy. No, if you get a 70, you're gonna get 7 out of 10.
Okay, that's all right, that's what I was thinking. Perfect, thank you.
So did that, okay, now you have to just generate your password. Go over here while you do that.